Well, today's going to be a brutal day if you own a house or you own any stocks because inflation, and the inflation number just came out hotter than expected. But we really want to break down those numbers for those geeks out there that really want to monitor this. Then we're going to go over where mortgage rates are, and I can just tell you right now they're going to exceed 7.25. Will we hit 7.5 today? That might be in the cards. We're going to break down the economic news, and then what I want to show you guys is a new tool that we have on our website that allows you guys to compare your mortgage offer to over 85 other lenders, the country's largest banks and mortgage companies. So let's get to it. So what we see today in today's headline is the inflation number increase, but what we're going to do is we're going to dissect that. Before we get there, here's what's going on in the bond market. So if you guys watch me on a daily basis, you know this is the number that I focus in on. This is my screen that I watch on a daily basis. If you can look over my head, the MBS market on the 5.5 coupon is almost down 100 basis points. Those are numbers that we usually see only when the market completely cracks and crashes. Okay, so you can see on the MBS 5 where it's 0.75 down, so 72 basis points down. So we're about 75 basis points on average down. I'm going to explain that here in a second. What that's going to do for mortgage rates, it's going to actually increase them probably by between 1/4% today only. So why is all this going on? Well, let's go over to the economic calendar that we have that we monitor on a daily basis to figure out what's going on. So even if you're not in the real estate side of the equation, you might want to start following me to see what's going on with the stock market, because real estate and the stock market has a kind of the same tendencies, because what we're looking at here is future earnings for stock and future economic growth in housing. If you don't understand this yet, stay tuned and watch the whole video because you're going to get it at the end. So let's get over to it. The inflation numbers came in today. We got core CPI. So what is CPI? Basically, CPI is a basket of goods. So what they do is they take some food and they take some energy and they take some housing numbers and they take some medical bills and stuff like that, and they monitor that basket of goods. It's the same basket that they monitor every month. So they take that basket in like August and they say from August to September, how much have prices adjusted? So that's what we're going to look at in today's numbers. We're going to actually break down each component. But why are stocks depleting at this time, or basically crashing at this time? Why is the stock market even down basically 30% so far this year? Because the inflation is eroding the purchasing power and the profits of companies. And we're going to go over that as well. So it's an action-packed morning, guys. Stay tuned. The first piece of the puzzle we have right here is consumer, the CPI numbers. So what we saw here is, I just explained what it is. So here's the components that make it up. But if you go down through here, you're going to see the CPI number actually rose, and it rose at an unprecedented level. There's only one time in history where we had inflation numbers this bad, and it was in the early 80s. So let's go through here. Let's really dissect the numbers and what actually increased in cost, I guess is the best way to put that. So here's the report, and I'll put the URL down below, or the link down below, so you guys can go over this. But it says consumer price index of all urban consumer products rose 0.4% in September on a seasonally adjusted basis. The Bureau of Labor Statistics reported over the last 12 months, everything increased 8.2%. So let's really drive down what's really causing this. Well, the increase in shelter, food, and medical care was the largest contributors. So let's really break this down. If you want to look at these numbers, let's look at housing or shelter. Well, the Federal Reserve raising rates, 2 weeks ago isn't really going to help the shelter number. Okay, so again, this is that barge I keep talking about. When the Federal Reserve makes some moves, it's going to take some time, maybe 6 to 12 months for those to actually take effect in the markets. So that's one piece of the puzzle. We're starting to see shelter prices come down dramatically. On the food front, that's the scary part of this, because we have diesel fuel still at record highs and food shortages because of fertilizer shortages coming out of Ukraine. So if you don't follow all that, all you got to do is tune into me every morning, watch 10 minutes, and you get your economics report. And then medical care. Medical care costs are skyrocketing. Wasn't the Affordable Cares Act really to cure medical costs from increasing so much? Just saying. So let's really dissect into these numbers, because when I really dissect into them, there's really nothing here that really stands out that really jumped. But overall, everything is going up. So here we go. So when I'm breaking down these numbers, what I try to look at is, here's the 1 year adjusted numbers. You can see those all the way over here on the side. Okay, you can see those here. This is each month and how these numbers adjusted. All right, so when you start out here, you saw energy. Energy back in March was 11%. So there was 11% month over month increase. Then it went down to 2, then it went back up, skyrocketed back in June, and it's plummeted ever since. So from March to now, we've had a 13% reduction. So we were positive 11, negative 2. Same thing on energy. Energy here, this is the overall energy, but when you start looking at gasoline and other fuels, you can see that we were peaked out over here. Look at this one, up 22%, now it's down 2, so a 24% reduction. But when you start going down through here, you can see shelter. Shelter isn't really making a major or catastrophic move. Look, we were at 0.5 back in March, we're at 0.7 now, so it's stabilizing. All right, so that's what we're looking at. And then we start seeing here in healthcare. Healthcare is up 6.5% year over year. So let's go down through some of the other numbers. Here's why you really should be paying attention if you're not looking to buy a house or not looking to in real estate, but in stocks. Okay, so what normally happens to stocks when you have a robust or inflation out of control? Think of it this way: when you invest in a company, you're investing in their future profits. Okay, so if we have inflation causing the prices at every level, we saw producer price levels yesterday increase as well. If we have prices for producers going up or companies, that means they're going to have to start either passing on those price adjustments to the consumer, or they're going to have to start losing profits. Well, what happens most of the time is the companies can't react fast enough, so their profits start to get hit. Okay, so you get it, the raw materials went up, they don't have enough time to really go in and jack up prices to equate out for that price adjustment in their costs, so that means they're less profitable. So I'm looking for a company, a year out, what their profits are gonna be. Well, if I look at the numbers previously to these CPI numbers, I'm expecting, okay, inflation to be at X, so I know my profits are gonna be X. Okay, but if my costs on everything rise, that starts to drop my profits. So I'm not willing to pay as much for that company's stocks today because I know their profits are going to come down. Why? The cost of everything are going up. Okay, so I hope you get that part of it. All right, so why is housing being affected? Well, mortgage rates are spiking at basically the highest levels that we've seen in decades. Why? Because inflation numbers are at decades and decades high. We've only had inflation at these levels one time. So that is why interest rates are going up. That's why the profit stock market is actually crumbling. So what is my expectations on this? Well, here's what I'm going to look at. So my expectations are the Federal Reserve is going to come out at the next meeting because of all these readings, and they're going to raise rates another 0.75% or 75 basis points. That again is going to erode confidence. It's going to erode profits in the stock market, and it's actually going to make housing more expensive because interest rates are going up. So it's not a good sign. So if you're in the stock market right now, I feel bad for you because I am too. We're down about 30% this year. If you own a house, don't fret. You've already bought. You bought it the price that you bought at. You probably have a rate at 3 or 4%, so you're good. Unless you are forced to sell anytime soon, you're in a good position. If you're looking to buy right now, that's the questionable thing. We have rents skyrocketing month over month, year over year at unprecedented levels there. And now we have interest rates on mortgages that are probably going to hit 7.5% this month, or even maybe this week. A rate that we haven't seen since the 90s. So that's going to really take a chunk out of housing. So if the Federal Reserve would just step back and give this time to work, it'll work, trust me. But what they're going to do is they're going to do another 75 basis points rate hike in November, and then the market is going to come down, and it's going to come down significantly today. But we're going to see the market starting to react to that. Then what's going to happen by year end is everybody, all economists, and it's even going to be stamped by the government, is we're in a recession. So if you want to find out what happens in a recession, I suggest you watch this video right here. I did it yesterday to explain to you guys what inflation's all about. So why do you usually come to my channel, or why do most people come to my channel? They want to figure out what mortgage rates are doing. Well, I don't have good news for you today. Hey, let me just show you a quick peek on the numbers I look at. Here's the chart that I look at. We can see that they are continuing to crash. The 30-year MBS on the 5.5 is now down 100 basis points. These numbers, like I said, aren't usually seen unless we have a catastrophic event, and the CPI number coming in at like 0.2 higher than what was expected isn't a catastrophic event, but it is in today's world. So let's get over to what the markets look like right now. So here's where rates ended yesterday. I can guarantee you these are going to be up today by noon. So these are the top 6 products that people use when they're looking to buy a house or maybe even refinance into a house. So these are issued by Mortgage News Daily. These are not my rates. These are no mortgage, individual mortgage or bank lenders rates. These are the national average. So what Mortgage News Daily does is they survey mortgage lenders all over the country, and they said if you had a client looking for a $500,000 home and they were looking to put 20% down, they had a 740 credit score, it was going to be a single family home in their primary residency, and I say that for legal reasons, here would be the rates. And again, these are national. These are on a national level. What I need for you guys to do is if you've gotten a rate quote, I don't care if you're locked in or you're not locked in, we have a new service for you. It's a free service that we're offering to all our clients. All you need to do is go over to the rate update. Here's my website. You can find out more about me and my team right here. What we just did is we added a loan estimate tab. What that is when and if you apply for a mortgage, within 3 business days of pulling your credit, the mortgage lender has to send you out what's called a loan estimate. That's your breakdown of the whole loan. It gives you your rate, it gives you your fees, it gives you everything, a complete snapshot in like 3 pages. So what I'm asking you to do is to let's check it. Let's check that rate quote you got with over 85 of the nation's largest banks and mortgage companies. How do you do that? We'll go to themortgageupdate.com. You click this button right here, fill out some information. This just enables us to figure out how we reach out to you. And then right down through here, you're going to drag and drop your loan estimate. It's going to come to us. Give us about an hour or two to review this. But the one thing I need you to do is I made sure that it's required that you put in all this information. We need to know your credit score, and we need to know how to reach out to you. So not necessarily every time we're going to give you a call, but what we're also going to do is we're going to start on Wednesdays. We're going to start doing live events, and we're going to pick 1 or 2 of these each week to go over those. We'll blot out your names, we'll blot out any sensitive information, and we're going to go over live. I'm going to show you what we do behind the scenes to compare your mortgage offer against 85 of the country's largest banks and mortgage companies. So my name is Dan Free. I do this event every day, so I hope you enjoy it. If you find value in my channel, don't forget to give us a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. And also don't forget, if you're a podcaster or you like listening to podcasts, check us out on any podcast that you use. Just go in there and search for Dan Frio, that's me truly, and you're going to find probably over 1,300 episodes in there. So I hope you find a value there as well. So God bless the guys. Thanks for watching. I'll see you tomorrow. Bye-bye.